Good evening, madam. I'm Umesha Senadira. We are group number 7. We have 10 group members in our group. They are Samiti, Hansi, Pavani, Thurusha, Kavishka, Anupama, Bihan, Umesh. We choose Pan Asia Bank as our investing company. Pan Asia is a leading commercial bank in Sri Lanka. It was established on 6th of March in 1995 in Sri Lanka. Pan Asia Bank provides services such as saving account, current account, loan, credit card, debit card, treasury service and trade finance. Now I'm going to talk about why we choose Pan Asia Bank as our investing company. Pan Asia Bank follow effective risk management techniques and Pan Asia Bank consume its resources very well and they have high skilled workforce. Next, we will move on to the industry analysis of our investment. There are different kinds of industries in our country. Some of them are food and beverage industry, hotel industry, tourism industry, banking industry, etc. Among those industries, we choose banking industry to do our investment. Through industry analysis, we discussed about the industry average growth rates, credit risk, liquidity risk, profitability and how government regulations impact to the banking industry. First, we will move on to the industry average growth rates. When we are considering about the diversified banking industry, it has gone 10% per year over the last 3 years, and currently the diversified banking industry is trading at price to earning ratio of 5.6 and price to sales ratio is 1.4. According to the forecasted growth, analysts expect annual earnings growth of 5.2% over the next 5 years. So we can conclude that analysts are more positive about the banking industry.
The other thing we considered while doing the industry analysis is how the fluctuations in the banking industry credit risk have happened. According to the World Bank report, the banking sector has recorded an expansion of credit during 2019 to 2020. The loan growth rate had increased from a low of 5.6% in December 2019 to 30.8% by the end of September 2020. During the same period, which is December 2019 to September 2020, the loan portfolio of small and medium scale banks increased from 2% to 2.2%. In the 2021 to 2020 timeframe, there was some mismatch between gross debt and debt receivable. Due to this situation, there were obstacles to the proper maintenance of credit unions in the banking systems. According to the Department of Economic Research, the Central Bank of Sri Lanka eased its monetary policy stance on 1st of June 2023. It is expected that due to the initiation of this monetary policy ease in the pressure in the financial markets will ease and the economy will recover from the highest recorded contraction in economic activity in 2020. The next criterion is liquidity risk. In the 2019 to 2020 timeframe, the banking sector shows high productivity against liquidity risk. During the period from December 2019 to September 2020, rupee gifts increased significantly and the loan to deposit ratio has been increased from 88.2% in September 2019 to 88.8% in September 2024 deposit growth. Since mid of April 2020, the banking market has been significantly lower with excess liquidity, but by the end of 2022, it will be possible to manage the liquidity. In the press release issued by the Central Bank of Sri Lanka 4th of January 2023, several financial sector policies have been mentioned according to the reports, monetary and financial sector policies for 23 and beyond. As mentioned there, the central bank will provide liquidity support to meet the cash flow needs of the banks. Therefore, the existing regulatory review in relation to existing capital and liquidity in the banking sector will be done. The next one is profitability. Banks get incremental profits from price changes in the secondary bank securities market, which is favorable for fixed income investments. Stock market traded securities have also made significant gains in 2020. In the year 2021, a significant decrease in bank profits has been recorded. However, according to central bank reports, the profit after tax has been reported as 90.2 billion rupees for the period from the end of 2021 to September 2022.
Okay, now let's see how government regulation impact the financial sector. Government regulation typically means a higher workload for people in the financial industry. These regulations are designed to ensure the safety of public savings, control the money supply, promote public confidence, and also support government activities. Here are some examples of how government regulations have impacted the banking industry in the last few months. First one is the Monetary Board of Sri Lanka Central Bank decided to maintain an SDFR and also a SLFR for their current level of 11% and 12%. Second one is as the country cannot get essential foods, energy and materials, the government decided to restrict the debt to solve this crisis. The government asked the parliament to approve the debt restricting proposal and the plan is effective according to central bank deputy governor and the treasury documents. Third one is the central bank has considered some of the exciting crypto institutes in Sri Lanka as a pyramid scheme and proposed to prosecute those few institutes. Fourth one is Sri Lanka's policy board maintained the monetary board fixed spot rate at 5% and fixed the credit facility rate at 6% to account for the rise in the official inflation figure. The board should have stated that the rate of inflation was increased and that it was mainly due to supply distribution and global communities surges at the time. Fifth one is the central bank said that Sri Lanka's foreign exchange crisis develops. It will ensure the security of remittance received from abroad to fund those companies. The central bank directed lenders to convert 10% of foreign remittance into local currency. CBSL said it would secure foreign currency receipts to boost medium-term foreign currency financing. The central bank announced that it has a foreign reserve of 3.55 billion of dollars.
I am going to explain about the SWOT analysis of the Financial Bank PLC. Under this strength, we can identify this company has good returns on capital expenditure. Financial Bank achieved a high level of customer satisfaction from potential customers. They have a strong brand portfolio. Let's move on to weaknesses. We can recognize having a high attrition rate compared to other organizations and also integrating a different work culture is not highly successful. Further, we can identify financial planning is not done effectively and efficiently of this company as a weaknesses. Under the opportunities, the financial bank has a constant free cash flows. Favorable new tax policies of the government will increase the profitability of businesses and lead to attracting new customers. Having new trends in consumer behavior is an opportunity. Under the threats in this, we can identify the fluctuations in the exchange rate and interest rate having an existing regulation on international trade to the company.
My part is ratio analysis of Pan Asia Bank. I will present the company financial performance over the 8 years, starting from 2015 to 2023. The financial ratio have been categorized into 6 main categories, including investment ratio, profitability ratio, solvency ratio, liquidity ratio, and efficiency ratio and grading ratio. Inventory ratio are used to measure the company performance from the investor's perspective. Earning per share shows the number of earnings that the company generates per share, so that the ratio has shown the increase and decrease over 6 years. and the peak year is 2021-2022. Price earning ratio measures the company's stock price relative to its earning per share. The company's price earning ratio has shown decreasing trend over the year. Profitability ratio are used to measure the company ability to generate profit. The company net profit margin has varied over the year, ranging from 0.096 in 2015-2016 to 0.077 in 2022-2023. The return on equity shows the company profitability relative to its shareholders' equity. The company's return on equity has shown the decreasing trend over the year, but 2022-2023 has increased by 0.17. Solvency ratio are used to measure the company ability to meet its long-term obligation. The debt ratio measures the percentage of total asset financed by debt. The company's debt ratio has shown the fluctuation trend over the year. The financial leverage ratio measures the degree to which company use debt finance its asset. The company financial leverage ratio has shown fluctuation over the year, with its highest point recorded at 18.67 in 2015-2017 and the lowest at 10.09 in 2021-2023.
I will continue the next three financial ratios: liquidity ratio and an efficiency ratio and the gearing ratio. Liquidity ratios calculate the company's capacity to fulfill its immediate financial obligations. The data sets consist of two liquidity ratios, the current ratio and the quick ratio. The current ratio assesses the company's capability to settle short-term obligations using its current assets. Over the years, the company's current ratio has demonstrated a varying pattern, reaching its peak at 13.49 in 2019 to 2020 and hitting its lowest point at 0.56 in 2016 to 2017. The quick ratio assesses the company's capability to fulfill its immediate financial obligation by utilizing its quick assets. The gearing ratio, also known as the leverage ratio or debt to equity ratio, is compares some form of capital or owner equity to funds borrowed by the company. The company's debt to equity ratio has shown a decreasing trend over the years, starting from 17.67 in 2015 to 2016 and reaching 9.09 rupees in 2022 to 2023. The last one is an efficiency ratio is a financial metric used to evaluate how effectively a company utilizes its resources to generate revenue and manage costs. Under efficiency ratio has two ratios. There are inventory turnover and working capital turnover. We can't calculate inventory turnover because this is the banking industry, so this bank doesn't have any inventory. The working capital turnover is measures how efficiency a company utilizes its working capital to generate sales revenue over a specific period. The company's working capital turnover has shown a similar trend to the current ratio, with the highest being 7.89 in 2020 to 2021 and the lowest being minus 5.50 in 2015 to 2016. Thank you.
Thank you, Pavani. Now I am going to describe about how we are justifying our investment decision. My teams and I focused on three main industries before we making investment decisions. They are hotel industry, food and beverage industry, and banking industry. Among them, we choose the banking industry because it is very suitable for our investment with our requirements. We choose HNB, Commercial and Pan Asia Bank, and from that we choose Pan Asia Bank as the right corporation for us to make the investment. The following points can be mentioned as the reasons for that. First one is financial performance. If we talk about the financial performance of Pan Asia Bank, its revenue growth and profitability are in a very good condition from 2015 to 2021. It also appears that its shareholders have received positive returns. Due to the economic instability in the year 2021 and 2022, there is a decrease in the income in those years. But compared to that, there is an increase in the income in the year 2022 and 2023. Also, the return on equity ratio and the profitability ratio has increased for 6 years. It is very good. Through that, the shareholders get a good value and their return ratio is also in a good condition compared to the current situation of the country. Second one is market positions and reputation. Here we focus on Pan Asia Bank's position within the Sri Lankan banking industry. According to our analysis, it was revealed that Pan Asia Bank is a well-established bank in Sri Lanka, and it is well-recognized bank in Sri Lanka, and also it has capable for facing economic challenges, and a bank that has attracted customers very well. Panasia has created good reputation in customers' heart and they're willing to do transactions and banking tasks with Panasia, and it leads to generate financial performance and increases shareholders' value as well. Thank you. Over to Tolusha.
I will continue this part. Third one is management team of the bank. By assessing the experience and records of the bank's management team, we found that it has a competent management team and an efficient management team compared to other banks. Through that, the bank's growth and success increases. Fourth one is branch network and assets. Pan Asia Bank has 85 branches, demonstrated its ability to serve a wide customer base. Also, they are all installed in the city center in such a way that customers can easily access them. Final one is technology and innovation. We have chosen to invest in the banking sector. The main necessity of the bank is the customer. In order to increase the price of stock and make profit, the main source of income of the bank must be fertile. In order to attract customers and keep them with the bank, technology and digital services are important in modern banking. In addition, we studied the bank's risk management system, interest rate and economic conditions, dividend history and the representative of our broker company, SC Security Firms, are discussing the study with Mr. Harsha Hettiarachchi. Pan Asia Bank was selected as our investor. Thank you.
Thank you, Tolusha. After the considering credit, liquidity, risk, and profitability, the banking industry was the best choice. Pan Asia Bank, a reputable bank, was chosen based on budget and other factors. Stepping forward, SC Security and we reached a mutual agreement and they become the broker company and the team helped build a CSE count. 301 shares were purchased in a relevant organization with SC Security brokerage firm support after the process. Over to you.
Next, we will move on to the weekly returns of the investment. To calculate the weekly returns of the investment, first we identified what are market prices of a share during 1 month period. We purchased 301 shares from Pan Asia Bank on 20th July 2023. From that day, we observed the market prices of a share until 23rd August 2023. To calculate the weekly returns of the investment, we use the formula P1 minus P0 divided by P0. In here, P1 denotes price of last weekday and P0 denotes price for first weekday. To calculate the returns in rupee value, we used P1 minus P0 formula. Here we can see how we take the weekly returns. As a summary of returns, first week weekly return is minus 6% and rupee return is minus 1. Weekly return of second week is 3% and rupee return is 0.5. Weekly returns of third week is 6% and rupee return is 1. Fourth week return is minus 5% and rupee return is minus 1. Fifth week return is 2% and rupee return is 0.4. Next we will move on to the annualized rate of return. In here we can see we calculate the annualized rate of return. Using this formula, we calculate the annualized rate of return and we gain 4.536585366 annualized rate of return regarding our investment. We can see the graphical representation of the weekly returns of the investment. In here, we can see the performance of the weekly return. These returns are fluctuated negative to positive as well as positive to negative.
Next, we will move on to the risk of the investment. Before we calculate the risk, we need to find average rate of return. We calculated it using summations of the returns divided by the number of weeks. According to that, we found zero average rate of return in our investments. After finding average rate of return, we can easily calculate the variance and standard deviation of the investment. You can see the variance of the investment is 22 and the standard deviation is 4.69. It means the risk of rate of return of our investment is 4.69.
Okay, now let's see how trade decision approves from the team members. First, all the group members will agree to select SC Securities Limited as a broker firm. As the second step, all the members will agree to invest 500 rupees to buy 301 shares from Pan Asia Bank. At last, all the members will agree to return off their invested money as sunk cost. So, we hereby certificate that we haven't any objections to all that matters.
Conclusion. Regarding the IPM module, we selected Fan Asia Banks to invest. Fan Asia Bank is an institution that provides the highest level of customer service. Fan Asia Bank had a team of employees with good operational capabilities capable of managing risks very well. After we examined the information, we found several strengths, weaknesses, opportunities, and threats that Fan Asia Bank has. That information is contained in the above report. After investing in Fan Asia Bank, the company's gross growth rate, credit risk, liquidity risk, profitability were included in the above report using graphs and get a clear understanding. Finally, we have put together a quality report that is easy for the user to use in a way that is very simple and contain all the details for a stock investor or anyone interested in the subject. End of our presentation. Thank you, madam, and thank you all.